Keith Coughlan, MD, European Metals, ticker on the AIM market, EMH. Thanks very much for the time of LSE Share Talk.
No problem, Alex.
And it's definitely much appreciated because I know you guys when you fly in and then you've got to go to these shows, and while you're here, you're just squeezing everything in.
Absolutely.
It's a madhouse like. I couldn't do what you used to.
Well, it can be, but in fact I think that as this year progresses I'm going to spend more and more time here because things are developing as they are. So I'll be around a lot more. So then hopefully we won't have to squeeze things into such a tight time frame.
Well, it's looking, I was looking at the news that's just come out, and it's looking very interesting to say the least.
It is. It's a fascinating industry, a fascinating space, the lithium market, and we're learning a hell of a lot. It's been a very steep learning curve over the last 12 months or so.
Yeah, it's the. So what I've got a few questions here that have been emailed in, and then if you don't mind, I'll advertise them as well. London South East, because I do a bit of work with them as well. But we've got some questions from guys there when I was travelling down on the train. So it's just to show this is like real people.
Sure.
We don't do like this candy coated stuff like.
No problem.
So right anyway. So you listed on the Australian Stock Exchange in 2012, and you joined the UK AIM market in December 2015. Why join the UK listing?
The short answer is because of the location of the project. So when we purchased the project a little over 2 years ago, I considered even then that at some stage we would want to dual list the company on AIM. The reason that it happened last year was in the middle of the year we did a placement, and a number of London-based investors took the majority of that placement, including Rare Earths, who are our largest shareholder, REM.
11%, isn't it? Oh, good.
Well, not in that placement, but subsequently.
Yeah.
So they're just below 12. And having those London investors come on to the register in a fairly significant way was the main trigger for us to say, okay, well, we think it's time to dual list on AIM now. But also I think it will be of benefit to us going forward. I mean, the project is 2 hours from here by plane. It's a lot further from Australia.
Yeah.
It's in a market where the people in this part of the world can understand it, and I think it's good for investors to have real-time trading, real-time access to their investments, rather than have to try and deal on the other side of the world, outside of their own time zone. So,
I agree totally. Yeah. Definitely.
So I think that's what makes it beneficial for shareholders. From the company's point of view, we hope to gain access to other pools of capital, to other sorts of investors. There are investors here, and I mean some institutional investors, for example, who are much more comfortable to invest in their own country, in their own markets.
Yeah, it's true. Yeah, definitely. It's good for us guys as well.
Well, I think so. It just makes it easier.
The time difference and all the rest of it.
So if you really like the story, but it was only listed in Oz, it makes it a lot harder for you. You've got to either open an account with an Australian broker, which is very difficult, and you've got to be up at in the middle of the night trying to trade, or you've got to get your London broker to put an order on with an Australian broker. And generally you don't have any real-time access to that order. Once it's placed, and there's very little flexibility. So I think it works for investors and for the company.
Oh, that's great, thanks. Can you give viewers an overview of your company, your latest updates from your 100% owned operation in the Czech Republic, please?
Certainly. So the project, as you say, it's 100% owned. It's a lithium tin project. And it's a globally significant lithium and tin asset. Now, we think it's globally significant for three basic reasons. Firstly, the size of the resource. From a lithium perspective, it's the largest resource in Europe, and it's third or fourth largest hard rock lithium deposit in the world. It has the potential to be significantly bigger than that if we were to continue drilling out the resource, but that's not a primary consideration for us at the moment. Secondly, the test work we've done so far suggests that it's going to be a very low-cost producer of the end product, lithium carbonate, and that's largely due to the byproduct credits. I mentioned it was a lithium and a tin deposit, so the byproduct credits we get from the tin there's tungsten associated with the tin, and then there's also potash that comes out the back of the lithium carbonate process, and there are some other metals in there that we haven't yet fully explored from an economic point of view. But those byproduct credits are very important to the economics of the project. And as I say, at a scoping study level, we appear to be a very, very low-cost producer. Now, obviously, we need to bring that up the scale of confidence as we do our PFS and then our BFS to be able to fully determine that. But at this stage, it looks that way. And I think the third reason why it's such a significant deposit is that where it's located. It's in Europe.
Exactly, exactly.
There is no meaningful production of lithium in Europe at all at the moment. And Europe is the second largest importer of lithium in the world. From China is the first, Europe is second. And if you look at the two main drivers behind the increase in the lithium-ion battery industry, the two main drivers are electric vehicles and power storage.
The future.
Yes, well, it is.
Yeah.
So electric vehicles, we're virtually on the German border. Everyone knows how many major automobile manufacturers there are very close to that area. And all of these guys have electric vehicle initiatives rolling out for the future. They've all declared that they're going to start producing electric vehicles. So that's, we're close to those guys where we are. The second driver, the battery storage industry. So this is a very large region for renewable energy. There are wind farms everywhere, there are solar panel farms everywhere as well. And the thing with renewable energy is you need to be able to store the energy to be used at a later date. So either when the wind's not blowing or the sun's not shining, or just as peak demand periods come on, you need to have stored the power from when you've generated it to be able to use it. And all renewable energies require storage of the energy for use at a later time. So location-wise, we think it's very important.
No, I definitely agree with you, because exactly what you're saying there. You read the media, you look at the people who are involved in the battery development, all the rest of it. The electric cars are pushing forwards, and it's the big buzz thing at the moment.
Well, Samsung, the big Korean battery manufacturer, have just announced that they are going to build a battery factory in Europe. They haven't announced exactly where. They've shortlisted a few places. I know there's one place in Poland that they've shortlisted, which is only about, it's less than 250 kilometres from Noveck, from our project. And I think this is a way forward. I think that the battery manufacturers see, with the growth of the industry in Europe, that they need to come to Europe and manufacture their batteries there, or else what's going to happen is other companies are going to start manufacturing batteries in Europe, and they'll miss out on market share. Yeah,
they'll miss out on the loop, won't they, really? When are you looking to bring the mine into production, and are you looking at a joint venture, or will you go on your own?
Well, we're hoping to bring the mine into production in 2018. Now, will we go alone or not? We're a very small company. We're capped at less than £5 million as of today, which I think is, I think there's room for us to be re-rated. But we're a small company trying to play in a big company game. So we definitely need to get some big brothers in the industry. Now, be that a JV, or be it off-take, or financing, whatever, we need to, and we are having discussions with potential strategic partners in order to try and do that. So at some stage we will need to bring a significant partner to the table, be it a funding partner or an off-take partner, someone of that ilk, to help us through the way.
You touched on there about your market cap. Your personal opinion, you look at your market cap and what you're actually achieving and driving forward and what you're doing, it's, in your opinion?
In my opinion, we're undervalued. Now, most CEOs of publicly listed companies are going to tell you that. I know.
But if they're telling the truth, or if you can look at the figures,
if I look at it
facts
on a comparative basis with other lithium development companies, I have a chart in my presentation, which clearly I can't show here, but we do a comparative chart of companies' enterprise value per tonne of resource that they have. Does that make sense?
Yeah, of course.
Yeah. So, we're currently trading at an enterprise value of about $1.60 Australian, so call it 80p, call it 80p per tonne of lithium carbonate equivalent in the ground. Now, there are a couple of companies listed on the Australian market that are trading at somewhat more like $200 per tonne of lithium carbonate equivalent. So, I believe there's room for us to have a re-rating, and we're trying to unlock the value now so that people can see, that this is a good investment and they should be involved in it as part of that re-rating process.
Just to lead on to that then, where would you see yourself in 6 months' time?
Operationally?
Operationally, yourself, would you be upbeat for the investors?
Well,
what would you think?
Okay, so
project in 6 months.
2016 for us.
Yeah.
The primary focus of the year is to have completed our preliminary feasibility study by the end of the year, our PFS. Excuse me. So in order to do that, there's a few things we need to do. There will be a second drilling program starting within the next couple of months, and that's something we'll announce fairly soon. We're just concluding the first drill program. Yeah. We'll report on the last 2 holes in that program within the next couple of weeks, and we've started plotting the drill program for the next stage. We've started that, we haven't finished it. The guys in country, my in-country managers are meeting with drillers over the next week to map out a strategy for the next drilling program. So we'll bring, in that drilling program, we'll bring a significant portion of the inferred resource to the indicated category as part of the PFS, right? So that increases the confidence in the ore body. That's one thing we have to do. The second thing is that we're concluding our studies on the lithium extraction technology that we're going to go with.
That's good.
And we'll know the answer to that within about 4 to 6 weeks, say. We're doing studies as to plant location, infrastructure sort of studies, which part of the ore body we will access first for ore, and all these sorts of things. We need to begin the environmental work within the next couple of months, and I met on Tuesday in Prague with the guys who I think will be our environmental consultants. They'll be appointed within the next few weeks as well to begin the environmental impact studies, and from that the preliminary mining licence will come as well. So those are the sorts of things we need to do. At the same time, we're still, as I've mentioned earlier, we're talking to strategic partners, looking at the possibility of certain EU EC grants that may be available to help us along the way, and all of that with a view to concluding our PFS by the end of the year.
So you're obviously quite upbeat for the next 6 months.
We've got a huge amount to do.
But you're getting there, yes?
Yeah, look, I believe.
Listening to what you're saying there, you've obviously got your business model.
Yes, yeah.
And you're going to roll it out.
Exactly. You have to have some flexibility in that business model. As you go down one path, it might change.
It changes, yeah, of course it does. Yeah, you don't know what's going to come down the line, do you?
No.
So it's, here's another one, a little bit of a cheeky question, this one. A question from a current holder is worried about the cash burn and placing concerns. Can you give any enlightenment to that, please?
Well, we will definitely be making a capital raising at some stage in the first quarter. We've said this for some time. I actually have offers of finance. They come, and we'll get an offer of finance or an expression of interest for finance every week. And there are various places that we can raise money. There are better ways and worse ways to raise money for a small cap mining company.
Oh yeah,
and obviously, and obviously for us, we're trying to raise our next tranche of capital in the most sensible way, in a way that will add value to the company. So if we have in mind that we need to raise X dollars, sorry, I'll use dollars.
No, yeah, carry on.
So if we have in mind we need to raise X dollars for the duration of 2016, but we have a share price that's down, so I might think, well, okay, I want to go and raise a third of that or a half of that or whatever. I don't want to go and raise all of it because it's more dilutionary for all of us, for all shareholders.
Mm-hmm.
So I'm trying to juggle that to raise our next tranche of capital in the cleverest way possible and add value so that when I come to raise the next tranche, it's hopefully at a higher price.
No, that's good, yeah. Rare earth minerals, they hold 11.87%. The stake in European metal. This is just a question from obviously another investor. Do large holders ever get involved or do they stay silent in your operations? So
in our operations?
Yeah, because they hold 11, nearly 12%, but they say to you like, you know, come on, or do they just keep out of it?
Well,
how does that relationship work? That's what he's asking.
So the CEO of Rare Earths, of REM, Kiran Mazaria, is on our board, right? So as part of the rules of dual listing on AIM for a foreign listed company, you need to appoint a London-based director. So while we were going through the process of, of listing on AIM, we cast around for a suitable London-based investor. And we, in the end, asked Kiran if he would come onto the board. Now that's not just because Kiran's a director of our largest shareholder, it's because of his experiences and his qualifications, and he's in the lithium industry. You know, so he's the CEO of REM, but he's also a non-executive director of Bacanora, and Bacanora are developing a significant project in Mexico. So he's within the industry. And that's important because the lithium industry is not a very big industry, and there's not that many people around, executives of mining companies, that have experience in the lithium game. You know, it's relatively new.
Yeah.
So Kiran is on our board, and he is a director of REM. But Kiran, he knows, you know, he knows how to operate, and he knows that he is not necessarily there representing the interests of REM. He's there as an independent director, like all independent directors, representing the interests of all shareholders. Having said that, we can ask him things that he has learned from his experiences at REM and Bacanora that are beneficial to the company as well. We certainly don't. If the question is, do we get any sort of pressure from REM to do things we might not otherwise want to do? The answer is no.
No, that's a fantastic answer. I interviewed the CEO from a Manning PLC on Wednesday.
Sorry, from where?
From a Manning company.
All right.
I don't want to name them, you know what I mean?
Sure.
They'll be rude with it. But anyway, I was talking to a CEO on Wednesday, a Manning company in London, and he's very optimistic about the market and it's picking up.
The general market?
The general market, the Manning market's been deflated, and I just said this earlier on with Dave, it's some companies now, they've gone into hibernation or they're digressing, but where you see other companies, they're like pushing forwards. So would you comment on the markets? What do you think?
Well, I think if we're talking about the market for resource companies,
yes.
I agree. I think in general I would say I'm cautiously optimistic about the market for mining companies. And so what we've had happen is we've had a massive industrialisation of China, and therefore the demand for all of these metals has been increased dramatically for the last period of time as China has gone through this significant industrialisation. And now obviously they're getting to a stage where they've slowed down. They've slowed down dramatically.
They're dumping steel on the markets today.
Exactly.
You can see it, what's going on.
So what that's done is it's depressed prices. Some companies have stopped operations because they can't be economically viable at these prices, etc., etc. And you're now getting a resetting of normal supply and demand in metal prices, right? So it's not that we've got a depression, it's just compared to what it was with China doing
supply and demand, basically,
exactly.
That's what it is. The downturn's there.
And we know this very well living in Western Australia because of the iron ore industry. You know, the iron ore is the biggest indicator here. You know, you mentioned steel and what have you.
Yeah.
So So we're now coming back to a stage where the supply is dropping, and you'll get its demand-supply equilibrium coming back into play. Different metals at different times. And, this actually goes back to the whole thing about you want to be a low-cost producer of whatever metal you are producing, because when you get shake-ups like this, obviously the guys who are higher-cost producers, suffer first. So yeah, I would agree. I think that we are at a stage where sensible people with money are starting to invest again. And there's actually a lot of money on the sidelines for mining projects. People are just waiting for...
Just waiting for the bounce.
They're buying.
They're looking for the bottom and they're looking for it to go back up. That's what they're looking for.
Yeah. The sentiment is still negative, and that's a big factor for a lot of investors. Happily, in the lithium space, we have strong supply-demand equations, so we're not suffering that. But in general terms, I would agree with the comments that you made.
Yeah. This is the last email one. I think you've already answered this. You have actually. What are your plans for 2016? You've said about delivering shareholder value, really, haven't you? So,
well, that's the plan. Yes.
Yeah. Right. So it never ends, but so I was coming down the train today. This is London South East, the website, and on there, what I did basically, I said to the guys on there that I was interviewing you.
Yes.
By the way, thanks very much, Keith.
No problem.
So I'll just read this off my iPhone. So, from Newbuy 58, what does he feel has caused the near 50% drop since the start to trade on the AIM a couple of months ago?
The drop in our share price.
Yeah, that's what he's referring to. Yeah.
Yeah, I think there's been some general market weakness. I don't disagree with that, and I think we've suffered a little from that point of view. I do watch our shareholder movements on a fairly regular basis. I get a report daily, and I have a fairly good handle on what our share register looks like. So there's been very, very little movement in the top 40 shareholders on our register, even through this up and down period. And I think, so most of the selling that we've seen, I think, has come from short-term traders, day traders, these sort of people who just seeing more activity in other places at the moment. If you go back a couple of months, lithium was pretty much the only game in town, and so it attracted short-term traders quite a lot. We've had a flurry in the gold price, and I think a lot of people who are in the short-term trading game have moved to take advantage of this sort of thing. Also in Australia, I'm not sure about the London market, we've had quite a bit of trading in some tech-type companies as well, internet and medical tech-type companies, and that also takes away some of those trading dollars. It's disappointing. I mean, as a director, you want to see your share price only go in one direction, but the fact of life is it doesn't happen like that. It never goes up in a straight line. So we just have to keep working, keep adding proper long-term value. I know guys who are directors of companies who always have an eye on getting out as much news as possible with a view to trying to sustain share prices the whole time. If you like, I'm guilty of not doing that, of wanting to build the company steadily and properly and add value along the way. Unfortunately, if we get short-term fluctuations, I think that's just part of the game.
I think at the moment as well, I have no skin in the game because I'm doing the website, but I watch the markets and you watch what's going on, and some companies are lucky they have a lot of sticky investors.
Yeah.
But you look at the UK investors at the moment, the way the markets are, and there's a lot of people chasing. They're chasing stuff all the time.
Yeah, exactly.
You see it.
Because there's not been the opportunities for some time.
Yeah.
So if we've come out and we've made some announcements and we've had a little run, and it looks like we might be stagnant for a little while now.
Yeah.
People might say, "I'm out of there now, and I'm going to go and trade a couple of gold stocks because there's a bubble there now. It's hot, not a bubble, it's the wrong word, but there's some active trading because of the gold price. So I'll go and I'll trade here, and I might come back again, or I might something else might kick along. Might trade some oil stocks or whatever."
Yeah, I definitely agree with that one. Right, we've got Super A143. They have some good names, these people, don't they?
Absolutely.
I've got no idea. Obviously, nobody knows who anybody is. Right, by the way, he's good grief. He's asking 4 questions. So the first one is, he uses the word we. When are you likely to hear more news on the most recent drills and potential upgrades from inferred to indicated?
Okay, so we, as I mentioned a little while ago, the last 2 holes of the first program, the results of that will be released within the next week or so. They're in and they're being, collated, and then an announcement will be put together. In terms of the inferred to indicated upgrade, we'll look at this drill program that's just been through and see how that looks from an upgrade perspective. But the next drill program will be designed primarily to focus on that issue. So there may be a small upgrade as part of the initial drill program, but the second drill program will be focused specifically on that.
Oh, that's great. Nice one. Given the forecast shortfall in lithium supply over the medium term, how quickly does Keith, because they keep using the different words, think he can get EMH producing? Can Noveck be accelerated because of previous mine operations, available data and infrastructure?
Okay, so 2018 is our aim. In terms of the existing infrastructure, yes, that will make things easier and quicker. So firstly, from a permitting point of view, because it's an area with a long history of mining, it's not as sensitive, and the permitting should flow quicker. Also, there's the underground infrastructure there already, etc. There's an available workforce. There's about 15% unemployment actually in this part of the Czech Republic.
Right.
Yeah, and a lot of those people have experience in mining. In fact, there are people still in the local town who worked in the Noveck mine before it was shut, back in the 80s. Yeah. In fact, the guy who's the supervisor of the local mining office, who oversees our drilling and things, was a mine manager there. So these guys are all around the place, and they'd all love for us to reopen the mine.
I would so, yeah. I can imagine that much unemployment around there must be terrible for them.
It is. So, that's another reason why we'd like to get things going as quickly as possible. So those are factors. We need to get the PFS done as quickly as possible, because then we can go to the sort of industry partners, the significant big brother partners I was talking about earlier. Because that's another level of confidence from scoping study up to PFS, for those sort of people to be able to say, okay, we're interested in getting involved, which would help accelerate the process as well.
Right, now that's fantastic. Given the proximity to the large German car manufacturers, EMH in discussion with, I think you've talked about this, well, you haven't. Are you in discussions with potential takers yet, or at least one of their radars? Does that make sense? Or at least on their radar. It's probably me reading it out, by the way. I'm looking at an iPhone here. That's how it is.
I think whether you're on someone's radar or not, you don't really know until they make contact. But we have been on at least one very big company's radar, because we met with them yesterday and they told us so. Now, where that relationship goes, I don't know yet, but it's interesting, and it's encouraging to be approached. In terms of specific car companies, no, we haven't talked formally to any specific car companies. And whether or not you actually talk to the car company specifically, or you talk to an intermediary, or you talk to the battery companies specifically, I think is yet to be seen. Right,
that's great. The next one from, I don't know where they got these names from, FFSAP. The company announced early in January that it is undertaking bench-scale test work to fully explore all the available recovery techniques for the extraction of lithium. Is it possible for Keith to elaborate on alternative processing techniques, brackets, on opposed to LITs, who time frame? Does that make sense to you, that question?
Yep, I think so.
That's the last one, so you'll escape after this.
Okay. So the extraction... Okay, so let me rewind. The mining process that we believe we will undertake, when I say believe, this is the mining process that the scoping study suggests we should follow. That may change as part of the PFS or the BFS. So, but I think it'll remain like this. Excuse me. So we mine the ore, we extract the tin and the tungsten. That's very straightforward, and it's been done in the area for 600 years. So, you know, everyone knows a fair bit about that. And that leaves a very clean, high-grade lithium concentrate. So that lithium concentrate then goes off to your lithium processing plant, and from there you produce battery-grade lithium carbonate. So what we're trialling is what processing route we use from that point on to extract the lithium. Now, the scoping study work we did was with Lithium Australia, with the technology that they've licensed from another Australian company called Lepidico. So Lepidico are the inventors and owners of that technology. So we did the work with them, with Lithium Australia, or with Lepidico via Lithium Australia to be more accurate. And that was the work we did for the scoping study, and we got good results from it. So that's a proprietary technology, and to use that technology there is a cost, right? There are other available extraction processes for extracting lithium and producing carbonate that are used by other companies, other processes, etc., and have produced lithium carbonate in other instances. So what we have been doing is trialling these other processes, specifically on our ore, to see how they compare with the proprietary technology from Lepidico, because there isn't the same price for using these other
of course,
methods.
whatever it's commercially viable, isn't it, really?
Well, we need to use the process that's going to do the best job, but give us the greatest return for European metal shareholders.
That's great. Cheers, Keith. Thanks very much.
We're done.
You were scared. Thanks very much for talking.
No problem, Alex.